Good evening, everybody. Ron Wheeler here, manager of options trading at VectorVest, and it's my privilege to bring you tonight's special presentation called Top Lessons from a Profitable Income Trader. And in tonight's presentation, I'd like to introduce you to Mike J. Now, Mike is a 64-year-old retired software test engineer, and he was in search of a good income-producing strategy. His main goal was to keep getting that paycheck even though he was retired. Now, some of the things that stood in his way is he's tried this in the past, and he said he had more losses than he liked. There was too many variables to consider. All that data out there, and what should I be looking for? And then finally, it left him with a feeling of failure. So let's go through the process. Let's go through the lessons of how a successful income generating system works. And throughout the presentation, I'll bring in some quotes from Mike and how he was able to accept it and overcome some of those variables. So the first thing I always like to talk about is lesson number one. You have to accept that not all trades are going to be winners. As much as we'd like to believe we can be 100% accurate, it's just not so. I want to introduce you to one of our easiest income producing strategies, the S&P 500. A lot of our income clients trade this because it's something they can do with only one symbol in as little as 15 minutes a week. Now, this is the trade results from the past 2 years, 2020 and 2021. Now, I want to direct your focus on a couple things. Over here on the right-hand side, this is the net profit, net loss from this system over the past 2 years. Now, it's a $2,000, $142 profit. Now, that may not seem like a lot, but to trade this system, you would only need $5,000. That's a little over a 40% return in 2 years. Now, that's great. But what I want to show you more specifically is this. Take a look at the system. You're going to notice it's got some ups and it's got some downs. The beginning part of 2021 was a lot of give and take. We had some winning trades, we had some losing trades, but you're going to notice there was nothing catastrophic. Now, if you look over here, this is a series of nice drawdown, but again, that's a series of 7 or 8 trades in a row that did not work, and we still were able to manage profits off that system. Now, you have to understand, over the course of 2 years, we had 102 trades. 60 of those trades were winners and 42 were losers. We were still able to maintain a 40% overall return. Now, in doing this and in seeing this, one of the things that Mike had said in his own trading was he knows what to do when he suffers a loss, and he should be able to recover from that loss. No different than what you simply saw there with the S&P. Yes, we had trade losses. Yes, there were a few trades in a row that lost. But overall, you have a good system that returns proper results and proper income. Now, the second lesson I want to talk about is don't wait until it's too late to act. This is an example of a trade that we took earlier in January. Early in January, if you're familiar with the market timing graph, we had our last DEW up signal. And in that signal, we decided to do just a test case of a bullish trade. I liked Apple at the time. Apple was just starting to break out of highs. It looked really, really good. So what I did is I placed one of our standard income trades called a bull put spread. Now, in doing a bull put spread, my goal is for Apple to stay above about 175. The stock was trading at 182 at the time. Now, the beauty of this is, and the reason I call this an income trade, is because Apple can go up and I make money. Apple can go sideways and I make money. Apple, as long as it stays above 175, I can still turn a profit and produce income in this trading opportunity. This is one of the reasons we call this an income trade, because we can still make money even if our direction is wrong. Well, in the case of Apple, guess what? As you've seen from the latest market, our direction was wrong. And this stock over the next 2 days had fallen all the way down to 175. And if I take it to a current snapshot, it's all the way down trading at 163. Now, if we look at this trade from a perspective of actual gain and loss, if we were in this trade currently, our trade would be down $255. Now, the maximum that we can make on this trade is $1,595. Now, in a trade like this, we use a set stop. Just like if you were to buy a stock. If I bought Apple at $175 a share, all of us have a threshold for how much we're willing to give up. Let's say we set a stop for 170. We do the same thing with an income trade. I sold a 175 put. The stock was at 182 at the time. If the stock were to fall below 175, I would simply exit the trade. Now, if you take a look, I've got two numbers on this risk graph. Over on the right, it shows a $997 loss, and that's what the loss would have been had we exited the trade at 175. Had we let that trade continue, it would now be down over twice that amount. Now, Mike J talked about this as well. He said that he no longer worries about what I'll do if a trade goes against me because I have a set end-of-day rule in place that will protect me from catastrophic losses. And that means I don't have to sit in front of my computer all day, although he can if he wants to. Now, lesson number 3 of an income trader is don't force it. Don't try to make a trade happen when it's not there. Now, what you're seeing in front of you is a snapshot of one of our tools in Options Pro called the Spread Select. And what the Spread Select will do is it will go out and find me income trades that have a risk reward of 3 to 1 or better and 40% less chance of losing. So all of these trades should give me a 3 to 1 risk reward or better and a 60% chance of success. Well, guess what? All I see on the right are fails. When I see fail, that means there is no trade candidate that will give me that result. So what do? Nothing. You can go long, you can go short, you can buy, you can sell. Those are valid trading strategies. Do you know what another valid trading strategy is? Do nothing until you find a stock that gives you a valid trade result. See the difference here on Affirm Holdings? Over on the right, I'm looking for bear call spreads, and I have quite a few trades that actually pass that criteria. 3 to 1 or better, and a 60% chance or better of that trade working for me. Now, this is a trade, if you'd like to, you can follow along. This happens to be a $65 call, $70 call bear call spread. You have a maximum profit of $1,700. If you take a look at this ITM percentage right there at 38, that means that this trade has a 38% chance of going against you. A 38% chance of failure, let's say. That means it has a 62% chance of success. And that's what we're looking for. Now, another beautiful thing that we're looking for in this trade is we have a maximum profit of $1,700. And remember, we're going to exit this trade if it goes against us a certain amount. I'm selling a $65 call. I'm exiting the trade at $65. If I were to exit this trade at $65, I would lose about $415. Think about that. You have a 62% chance of success. We're going to talk about profit targets a little bit later in tonight's presentation, but just as a head start, we would look to make about $850 in this trade. We have a 62% chance of making $850 and a 38% chance of losing $400. Those are the type of trades that you look for income. Now, the fourth lesson of profitable income traders, put yourself in the penalty box. If you find yourself having losses that are larger than you expected, if you find yourself in a string of failed trades, maybe it's time to reassess what you're doing. Are you following the plan? Are you doing the proper risk-reward strategies? What are you doing wrong? Don't keep losing. Now, the fifth lesson, don't focus on the money. And what I mean by that is too often times, income traders will get into the fold of they have to make money. I have to make money by the 15th of the month. I have to make money by the 30th of the month. It doesn't always work that way. Don't focus on the money. We focus on the process. Now, One of the quotes I often give our income students is this quote by Drew Brees. And what Drew Brees was asked, he was asked about what advice he would give a young quarterback in the league. And you can kind of read it right here. I'll pick up right in the middle. And it says, he thought for a minute and then answered earnestly in a way that the best coaches would truly appreciate. What Brees said was, so much of our league is about results, right? We're in a results-driven business. I can't think of any other business that's results-driven other than trading as well. I mean, trading, football, sports. But truly, it's about the process. If you focus on the process, the results take care of itself. Develop your process. Focus on that process, because too many times we get frustrated because the immediate results don't match up with the process. But if you focus on that process, you get to the point where a good process consistently equals good results. And that's what you saw earlier in the difference of that S&P 500 system. What did we see? We saw trade that over the course of 2 years returned about a 40% return on your capital. There was times during that trade we had our ups, we had our downs, but the entire 2-year process returned a very, very good amount. Now, I talked a little bit about this in that Affirm trade, but lesson number 6 is all about taking profits early. Taking profits early not only increases your accuracy, but it increases your profitability. And I always go back to an expression. Do you ever hear the expression, half a loaf is better than none if you're hungry? Well, if you're hungry and somebody gives you a piece of bread, are you going to argue with them and say, well, I want the whole loaf or I want nothing at all? Hopefully you don't do that. Trading works the exact same way. Let's take a look at Affirm one more time. Now, in this example of a trade, I would be looking to make, like I said, around $850, which is roughly about half of the credit received. Okay? Now, in order to hit that profit level, that means a firm is going to need to go down about $7 a share. So if we take a look at our risk graph and I see this green arrow, as I line it up to the profits on the risk graph, if this stock goes down about $7 a share, I will make my 50% and I close the trade. It's hit its predetermined profit level. Now, oftentimes traders get what I like to call seduced by those profit targets. But Ron, I'm leaving stuff on the table. I can make $1,675. But what you don't realize is in order to achieve that, the stock has to move down almost $22 a share for you to hit that target. I'm not saying that take your $7 in Affirm, your $800 and move on. We can continue to trade Affirm if the stock keeps falling. We would exit this trade and we would simply place another trade. We keep moving our trade down as we collect those 50%. If we kept this trade on till it went down to $40 a share in this one trade, you are leaving that trade on for a long period of time. The longer you have a trade on, the more you expose yourself to a lot more erratic market behavior. And if there's one thing we saw in 2021, it was erratic market behavior. Take your profits, move on to the next trade. And that really moves us into lesson number 7. Don't overexpose yourself. Trading is a marathon. It's not a sprint. If you push all your chips in on one hand, you're not going to get to see any more if you lose. What we want to do is take our account and we want to spread that risk across so we can do multiple trades over a multiple series of time. So I want to share with you the one big enemy. The enemy of any income trader is taking losses that far exceed the average gain. And we try to keep our losses and our drawdowns into the very first part of what we call the percent loss drawdown versus gain to recover. As you start losing more capital, it takes a much larger gain to get you back to break even. Now, could you imagine having a 100% return? If you draw down your account 50, 60%, your 100% return would only allow you to get back to break even. You still wouldn't make any money. Remember earlier we talked about putting yourself in the penalty box? If you're drawing your capital down more than 20% in a good income system, you're probably doing something wrong. Put yourself in the penalty box, go back, look at your trades, and find out where you're failing. Now, another thing that we do is we like to maintain consistency by picking a universal amount for each credit. So for example, if I have a $100,000 trading account, I might look to make a $1,500 credit trade, meaning I'm looking to make about $750 on each trade. If I have a $50,000 account, I might look to make about $350 per trade. And the reason why we want to keep that consistent amount is because when we have our losses, the consistency also works there. Through the course of 2021, my average gain was about a $400 gain on a $50,000 account. My average loss was about $420, maintaining a good 60+% consistency. We don't want to have our losses exceed our gains, because a lot of income traders come to me and they say, Ron, I've done this before, but I had a great winning streak. I had 2 or 3 months of trades that went for me, and then boom, one trade wiped out all of my winners. Well, that's never happened to me. And it's never happened to me not because I have some super secret trading strategy that never loses. One of the beautiful parts of income trading, especially with options as we do, is that we know the risk up front. I know exactly how much money I can lose. And I would never put myself in a position where one trade could wipe out a bunch of winners. Let me show you an example. Earlier I showed you Affirm Holdings, and I showed you a trade that had a 62% chance of success. On that chance of success, we could make about $800, and I think the loss was around $400 if I'm not mistaken. Oftentimes, income traders, they get, and again, for lack of a better word, they get seduced by probability. Let's take a look at this trade right here. This trade theoretically only has about a 1% chance of going against you. But here's the problem. Even if it goes against you that maybe 1 or 2 or 3% of the time, look at the amount of money we can make at 140 versus the amount of money we lose at $4,860. Yes, the probability works fantastic. But if this trade goes against you 1 or 2 times out of 20, you are going to lose a significant amount of money. We do not set ourselves up for catastrophic losses. Now again, I want to bring in some of Mike's comments. Mike found the same thing. I no longer worry about what I'll do if a trade goes against me because I have a set end of day rule in place that will protect me from catastrophic losses. Mike, like me, will not take a trade that will suffer from a catastrophic loss. We do not take those trades. Another good lesson from profitable income traders is get good at one thing first. There's an old expression, practice one kick 10,000 times and not 10,000 kicks one time. We want to learn to get good at one thing first. There's a lot of different trading strategies out there, and I'll give you a lesson from my own trading history. I've been trading now for 25 years, and back in 1997, I first started learning trading, and I started with about 7 different trading strategies. I was all over the place. One of my mentors at the time said, Ron, take a break. I want you to do nothing but this one trading strategy, and that's it. So for the next year and a half, all I did is I took one trading strategy and I learned the ins and outs and the nuances, and I became good at it. Once I became profitable and I sustained profits for a long time, I added another strategy. Same thing. Once I became adept at that strategy, returned normal profits, I added a third strategy. Don't overwhelm yourself trying to learn everything all at once. And then lesson 9, there's a difference between a losing trade and a losing system. Now, in trading, as I showed you originally, there's going to be times when you might suffer a couple losses in a row. You might have 7 or 8 gains in a row. That's how trading systems work. Over the long haul, however, they should return profits. And that's the reason I showed you the breakdown of 2020 and 2021 in our S&P 500 system. And I'll pull that graph right back up for you again. If you were trading this system, and let's say you started in the end of 2020, you suffered, unfortunately, some very good losses right in a row. Had you given up on that, you never were able to recover. If you kept going, kept your risk down, didn't push all your chips in, guess what? That system ultimately returned profits after a long time. Too many traders throw the baby out with the bathwater, if you know that expression. Too many traders, after they take 2 or 3 losses, completely throw out trading systems. Why? Because we have it in our head that we always want to find that holy grail. A good system will have its ups and downs. Nothing will ever be in a straight line up, including this. And again, as Mike had said, he knows that if he suffers a loss, he should be able to recover from that loss. Lastly, a good trading system, a good income approach should have a plan, a set plan, not abstract rules, a set rule set that you should follow. Like in your car with a GPS, if you want to get to another city, plug that city into your GPS, it'll give you turn-by-turn guidance. And that's exactly what an income system should be. Rules to set your trades up, rules for where we exit, rules for where we take profits. Just like you saw with that S&P 500, a set rule set that will follow you through with gains, losses, keep your risk small, and keep your exposure low. Now, what are some characteristics of a good trading plan, especially an income plan? What we look for first is we want to be able to make money even if we're wrong. We think a stock will go up, it goes sideways or against us, we can still make money. In a bearish market, we think a stock will go down. Guess what? Even if it doesn't, we can still profit. We want something that's not capital intensive. There's a lot of good income strategies out there using covered calls. There's things out there using dividends by buying stock. This options plan is not capital intensive. You can do this with as little as $5,000. We don't want to suffer large losses. Large losses obviously takes us out of the game. It puts us in that hole below a 20% drawdown. A good income strategy should have no large losses. Backtesting results. You should be able to look back and see backtesting over a period of time giving you consistent gains. And built-in protection. We want to see that built-in protection. That way, you don't have those large losses. You're not exposing yourself for unlimited risk. These are the things that should all be part of a good income plan. Now, what is the results of a good income plan? Well, let's talk about Mike one more time. Mike, from June of 2020 to December 31st, 2021, he said he had a 2,882% gain. 28.83 times his starting amount. 3,100 turned into 95,000, and out of 66 trades, there were only 2 losers. This is the result of a good income strategy. Now, if you're in the market for a good income strategy, I want to introduce you to our options paycheck. Mike J implemented our options paycheck, and this is the results that he was able to achieve. Now, we have an options paycheck class launching in February. If you go to www.optionspaycheck.com, you can see all of the details of the course, and you can sign up by clicking the register button. Just to give you a good idea of what the class is, it's a 7-week, 7-module course. If you've never had experience with options before, we teach you in the very first step how calls and puts work. This is going to allow you to be a confident option trader. In the next 2 modules, 2 and 3, we're going to teach you 3 trades. 3 trades are all of what you need to be income traders. A bullish trade, a bearish trade, and a neutral trade. In Module 4, if you don't know how to select your stocks, we're going to show you how to do that. We're going to teach you market timing. We're going to show you when you should be bullish and bearish, and then what stocks to trade along with that. I'll also introduce you to index trading like you've seen with the S&P 500. Module 5 is all about using the options to maximize your trades, getting the most probability, the most potential profits, and avoiding some certain trading landmines. And Module 6 will teach you the management. How do you exit the trade with profits? How do you exit the trade at a loss? Are there repair strategies that can come in and reduce the losses when we suffer them? I don't want you to be the deer in the headlight. I want you to be able to exit a trade properly. And then in Module 7, we talk about the execution. We'll talk about different brokers. We'll talk about some of the things that you'll see in different brokers. That way you can go out there and execute your trades properly. Now, I'll leave you with one more comment from Mike. A good profitable income trader what do you have to lose? Unless someone is completely happy with their current investment strategy, there's most certainly something taught in the course that can help you improve. Be like Mike in 2022. Get yourself a good income approach. Go to www.optionspaycheck.com for more information, and you can register for our February class. Thanks for watching, and good night, everybody.